Everything's hot. It's hot in Texas. It's hot interest rates rising, hot geopolitics, but gold is cool. When we look at gold stocks, the S&P, they, on a ratio basis, are at a huge discount. And something at US Global we quite often like to identify is the rate of change over 60 trading days. It's called an oscillator. And one standard deviation basically highlights over a rolling 60-day period that gold will move 8%, 15%. It all depends on that timeline. So what's most important for investors is that over a 60-day rolling period, what is one standard deviation? And is it up or down one standard deviation? And usually it's the inverse to the dollar. So what are we witnessing today? We are witnessing that the dollar is up one standard deviation and gold is down 2 standard deviations. And that says mathematically, if you were in Vegas and you were counting cards, the opportunity for mean reversion is much greater whenever we get such a wide spread. So we think that gold is undervalued just on a statistical basis in addition to fundamental ratios. The other really sort of fascinating argument is that gold historically has had a trend line that correlates with rising debt. But for the past 3 years, it's not been doing that. It's been basically sideways. Debt continues to grow at a rapid rate, and the price of gold is not moving with it. And there's a big debate that gold is being suppressed. The money appears to be moving the bullion ETFs and going into gold equity ETFs. And that shift is telling you that there's a more bullish sentiment. When it just goes to cash, that's truly a bearish sentiment. But this is much more smarter sentiment. And when we do our sort of quant approach of looking at gold stocks, many of them are extremely undervalued and offering very high returns on invested cash flow relative to the overall stock market. So I think the surprises over the next 3 months is much more on the upside than there is in the downside. When I first got in this investment world and learned about gold, I was told about the golden rule. And there's been so many definitions. And so one of the definitions was, who owns the gold makes the rules. And I always chuckle over that, whereas the golden rule of being kind to other people. For me, the golden rule is always having a 5 to 10% weighting in gold and gold stocks and rebalancing each year. If you're ultra conservative, you have it in gold bullion. And if you're much more looking for growth, you have it in gold stocks. And you just do this mean reversion. So remember, the 10% golden rule. Happy investing.